Good evening. Godric here, your stock market mentor. Sorry I'm late. Stock market Monday night's happening. Hello, Calvin. Welcome, Calvin Hill. Going to talk about the stock market tonight. I have a couple of things for you. I have a couple of trades for you. Some exciting things today. November 27th, 2023. Monday night. Dow Jones 35,333 down 56, which is basically flat. The market's been going up, and 36,006 I think is the all-time high. So we could be in a bull market. We could break the all-time high, and that will be good because stocks will be going higher. If you have stocks, you'll be making money. If you have a boat in the water, when the tide rises, all boats go up. Gotta have a boat in the water. Gotta have some investments, buy some stocks. I appreciate you guys. Welcome, Jimmy Brash, Chris, Marka, welcome. Godric here, your stock market mentor. I have a couple of trades for you today, and I want to talk about, I'll just jump into it, ROKU. ROKU stock symbol ROKU. So this one's what I call in play. In play. I'm writing in my journal, so if you guys want to take some journal notes, please do. Some tidbits you can go back on. You heard it here first. If I tell you a trade and the trade works out, you heard it here first. Okay, so Roku symbol ROKU, and I have this guy here +8 today, 102, basically 103 today, and I wanted to show you something. I put the 5-year chart here behind me, and we were at a high like before COVID. It was at about 480 in price. Roku does a streaming box, so you can have all those apps like NFLX and Amazon Prime. But also they have their own Roku channels, and they also have, they sell the box and the remote control. So I think it's an intricate part of streaming. So that's why they're hot. Anyways, I wrote a little, I made a little arrow here, a yellow arrow showing that if this stock can come back to its all-time highs, you can make a lot of money. It'll probably go higher tomorrow because it's effectively in play. And it's around, let's just say it's around 103 right now. And if it can go, let's say it's back to 200, 300, 400, and match its all-time high, maybe even break its all-time high. Like if you have like a call, you'll make money in the stock. That's no doubt. But if you have like a call option, for example, something that has a lot of leverage, you can make literally like 10, 20, 30 times your money on that. And let's say let's say it's going to move up within, let's say, a year, right? So you can get like the option for like next year, next January. This is November 27th, 28th, 2023. So you're looking at like January 2025. Let's say give yourself a year, right? And no doubt that call option would be expensive, but if that stock can start moving up, like this arrow start to pick up, then that call option will be going up, and you can get leveraged return. And let's say it's not uncommon to have like 5 times leverage, or 7 times leverage, or 10 times leverage with a decent call option. I'm going to show you which one that would be. Hello, welcome, Victor Kings, Joey, Manuel, Marka, Adbum, appreciate you. Give me some likes in here. Give me some shares. Help me get some people in here. I'm doing Stock Market Mondays. Dodger Cherry Stock Market Mentor. We're talking about Roku. Roku was up 8 today. It's pretty hot. It's moving up. Um, don't be afraid. Don't be afraid to buy high price stocks because they're better. They're better because they've proven themselves by going up and up and up. These low price stocks are low because they're trash and they haven't gone up. So think about it that way. Like gold is more expensive than lead. You know, the fine wine costs more money. The high price stocks are better. You know, I was just showing you here. Like Apple, for example, high price stock. Obviously, they have a good product. Nike's 107. Starbucks 102. Like stocks aren't low priced anymore. You think of it like inflation. You know, like a block of butter is $5 now. You know, a gallon of gas is like $6 now. You know, just think of it like inflation. Like stuff goes up, but also the quality costs more, right? Here, Philip Morris is 94, and here I got at the bottom. I got Netflix 479. Netflix is one of my favorite stocks. I always tell people that they kind of are in a similar situation to Roku, except that Netflix is already well established. Roku's trying to like climb in and clawing its way to like reputation, you know, whereas Netflix is already the boss of streaming. Roku's like you know, many steps down, but because they have the hardware, the Roku controller, and the Roku little box, kind of like a Fire Stick, but I think it's better than a Fire Stick because they have that hardware, which allows people to go on Prime, allows people to go on Netflix and other apps. I think that's intricate, and that's why they're valuable. And really, they're the top player in that category, for what it's worth. Here I have 1 week performance in Roku. It was, let's say, down below 90. And I have some news here for you. Kathy would buy Zoom. Okay, well, Zoom's another one. This is the Roku one. Okay, so Roku stock up. Cannonball Research turns bullish on Roku shares. Even if the advertising market doesn't improve, Roku Incorporated shares could be primed for gains. Cannonball is like there's like hundreds of these investment firms that are gonna like rate stocks. You know, they'll say Apple is a buy from neutral. They'll say Roku is a buy from neutral. But what you're looking for is not only like do people usher buy ratings, but that the stock also is a quality. You know, like for one, it has like does it have volume, right? Roku had 16 million volume today. See if I can get it for you. Here you go. 16,200,000 volume. I want you to remember this day because when Roku has 16 million volume, it's going to be up the next day. Nothing's guaranteed, but like I'm gonna just like put it out there. Like if it's up 8 points, so like if you guys don't know about stocks, if it's up 8 points, then that means that if you have one share, you made $8 basically. A point is like a dollar. The 100 shares, $800, right? So the stock is 100 points. So like to buy one share is $100. Now, if you have a stock option, like a call option, for example, it controls, and that will give you play in the stock. Stock goes up. While the stock is up 8 points, that's 8%. Right by 8, 24-fold. So it's like the shares is a difference basically. 2 months and 1 week, 73, and it's up 273, and it's up 200%. So it was about 60. I think yesterday was about 68. Let's just say 68 cents. So I bought it for $68. Okay. If it says 68 cents, you multiply it by 100. That's how call options work. So it becomes $68 cost. One contract, one call controls 100 shares. Now today, the stock shot up and the option went up 200%. So basically, went from 68 to 173. 173. Okay. So now the outcomes 173. It's gonna be 506. You could go to 506. Let me tell you about the downside. The downside, this call option is basically, it's kind of like fluff because Roku is only $103. This call option is saying that the stock needs to be 125 or higher just to have any value at all. Okay, so this stock option could expire worthless. So the risk is when you buy a call option, it can go to zero, just flat. Just throw it out there. Like if you buy call options, just be prepared to lose all your money. You lose all your investment because if that call option expires worthless, it'll be zero. If the stock doesn't go up in a meaningful way, if your call, you only have till January, till the third week of January to sell this. Ideally, you want to sell it sooner. Buy the call or buy the option and sell the option. Same difference, I think, as far as getting your profit out. So, again, balance. You have some shares. Let's say you have 4 shares of Roku. So at 103, that's $412. Okay, and then let's say we get 2 call options tomorrow. This says 173. I'm gonna just say it's not. It's gonna be higher because the moment the market opens, it'll be up a point or two, and this 173 call option will be like 190. Let me just put 190. So it's gonna be, you're gonna put 380 in call options. So you can get 2 call options for January 125 strike for $380. See that? Like one of these will be 173. If it's 190, it'll be $190. And if you get 2, it'll be 380. So like that's the whole point. Like you got shares, 400 in shares. You got almost 400 call options. You got $800 investment. So that's like a small investment. Couple reasons. A couple things is to think about your investment in stocks that you can get behind. Don't just like buy random stuff that people advise. Like don't listen to me. Like look at Roku. Like look into the company. Like do they have a product? Do they provide a service? Does the stock have a lot of volume? Is there volume? Is there enough volume in the stock? Volume is important because when the stock, let's say, dips, a lot of investors there's enough investors and traders in there to buy those shares lower. That price is going to climb back up because of all those people buying it at the lower price, and that's going to save your ass. And that's why high volume is desirable for a stock. And like I showed you, we have 16 million. We have 16 million volume. Where is it here? Right there. 2 million is good volume. I mean, some of these bigger stocks like Apple, 30 million, 40 million. This one has 16 million. So, I mean, it has a high volume for yesterday, for today, and tomorrow, again, it'll have high volume. The chances of it selling off, like going down at this point, like when it has this uptrend, I'm going to show you. When you see a stock like this, I'll show you this uptrend again. When this is happening, like in 1 week, that's an uptrend. The idea is that the trends will continue. So, like I said, the stock's in play, the volume is up, price is moving up, call options are going up, people are making money. It's more likely to continue than not. However, at some point, people will start taking the profit, and it will come down. Like gravity goes up, it'll come down. So, There's always risk. There's never a sure thing. But like if a stock is hot, if it's a good product, if you get behind it, then ride the wave. I say ride the roller coaster. And then also, and then want to say, choose an exit point. And here's what I want to get to about trading. When you get in, if you're going to put $800 into this trade, which is the trade I'm telling you about, $400 in shares, $400 in call options. You want to have an exit strategy. I would say on the shares, let's go 1 year time horizon in general. Like let's like follow Roku for 1 year and just see what it does, because it could go 200, 300. Okay, and if that's the case, and you're in this stock, you have these call options, you make a lot of money. I mean, we talked about 24-fold return in the call options. If you even made half that, a 12-fold return with your $800, let's do that. 9,600, 800 times 12, 9,600. You can get a $800 account at $10,000 on a trade like Roku. If you have, a few call options, and it performs, and it does this. I'll show you again. It does this kind of graph where it's coming back, it's climbing back. Oh, this is not. Go ahead and this here showed the price before COVID. See if I can get that graph back I showed you. When it starts climbing up like this, it's right, man. It's climbing. It's in play. Stock's moving up. Look at this. This is earlier in the day. Can you see the bottom there? Sorry. So that's an example of a trade like on Roku. You're going to put, like example, half in shares, half in calls, and I showed you an example of a call option that went up like crazy today in 1 day. And if you look at the chart and it's going up, and you can see, let's say a pattern, you can call it a trend, different words they use. But the stock's in play and it's going up, you can make a lot of money, and that's the end result. And what happened to my live? You guys hear me? I think I clicked off the effects. Here we go. Welcome back. Street Dreams, welcome. Rishi Shaman, welcome. Melat, welcome. Appreciate you. J Leads, KPC 2K, welcome. Stock market mentor here, Godric, talking about different stocks and positions. We discussed Roku, talked about Roku shares and call options. You make a lot of money. Now, I mentioned Netflix. Roku is no Netflix. I'll just say that right now. Netflix is, Netflix is also, I guess, aggressive, you can say. Roku is even more risky than Netflix. Netflix is more stable, bigger company, more money in it, more solid company. Roku, like Netflix, for example, has like really clear profits and more revenue, whereas Roku, on the balance sheet, they're losing money right now. Like if you look at the EPS, it's a negative. If you see an EPS in the stock, it's an EPS negative, they're losing money. If you see EPS positive, they're making money. So think of it that way. Netflix has a positive EPS, Roku has a negative EPS. So I think I showed that when I showed you the volume. It also had the market cap. Roku's about 13 billion market cap, but Netflix is like 180 billion. So like in essence, like Netflix is like more than 10 times the size of. probably 15 times the size of Roku. So think of it like that. You have a small company, Roku, and with a small company, it can it can grow faster. You can grow more. The stock can go up in a more meaningful way as far as there's more room for growth. Whereas with Netflix, Netflix is already the number one entertainment company. Netflix already dethroned Disney as the number one entertainment company. And then with 200 billion market cap, they're pretty big. They're not. They still have growth ahead, but it's not like they're gonna double. Like when I showed you Roku can go from 100 where it is now to 250, 300, maybe to 400. That's like the stock doubling once or twice or three times. Like Netflix, I don't think that kind of growth is I don't want to say possible, but unlikely. Like Netflix will probably go to 500, 600. So not really double. But Roku, it can go like to 200, 300. So the Roku can double. Whereas Netflix is so big, it's just gonna move slower. Like look at Apple. That's the big one. 2.5 trillion market cap. So it's gonna move slower. It's more solid. The call options aren't gonna be as meaningful. Like with Roku, call options you're making like maybe 193%. With Netflix call options, you'll make 50%, 75%. And with Apple call options, you're probably gonna make 10 to 25% because it's just not gonna move that much. It's so big. It's like fat. So that's the difference. The difference is, Apple, 2.5 trillion market cap, Netflix, 200 billion market cap, and you have Roku, about 13 billion market cap. So like huge, big, and tiny. They all move different. More risk in Roku, less risk Netflix, and less risk in Apple because the least risk in Apple because it's so big, it's so solid. They have a product that are like in 100 countries. They have a way to make money. Everybody has an iPhone or want to. And then, so when you get behind a company, like look at if they can provide, if you can buy the service or if you can buy the product of that company. I think that's a good criteria. A lot of these, penny stocks, a lot of these no-name stocks, mom and pop people like throw around like in chat rooms, throw around stocks in chat rooms, father-in-law recommended. These are like no-name companies. They're basically like nobodies. I wouldn't buy those. I would always invest in a stock that you can buy the product, you can buy the service, you can see that they have a value to the world. They have real employees, they're real. So keep that in mind. So Roku, I think, qualifies, though it's risky. Netflix also, I like Netflix, but Netflix is $4.74 per share. And like I said, I mentioned Apple too. Apple's good. Apple was at about 180 a share, and Roku is about 103 a share. Welcome, Tim McLevin. Boona, welcome. Appreciate you. Give me some likes. Give me some shares. I want to wrap up early today because I was late. Sorry. I want to keep you too late. But we did discuss Roku and touch base on Netflix. We discussed our trade on Roku. I think the stock's in play. They're going to go up tomorrow. And, let's say if you do January calls, I would say sell them by December because you don't want to get caught at the end when the option could expire worthless. Always keep ahead of your options. I never have a call option through expiration. Almost never. Unless it's in the money. I generally will trade a month before. I'll close it a month before. Then if I want to keep with the stock, if I want to keep with the trade, I open up the further, like go out 3 more months on the call option. So I have more time. That's another thing. When you do buy a call option, give yourself plenty of time. 3 months, 6 months, a year. You have more time to trade. You have more time for the stock to go up. So when you get a call option, I never get like next Friday, next month. I never do that because it's just too risky. Like you're buying fluff. You're you're generally looking for a long shot if you're trying to buy like next week, next month. Um, any questions? Anybody have questions? Picano, welcome. Nick Z, welcome. Appreciate you. Give me some likes. Throw a few shares up. Hit that arrow at the bottom. Give me a few shares. Get some people in here. We're gonna wrap up soon. Anybody have any questions for Godric? I'm up here every Monday night talking about stocks. What ROKU price target 2024 next year? I don't know, but I'm gonna say for me, I'm gonna say 200 a share, and that's just I'm going with like I follow trends, so I know that before COVID, the decline in the tech stocks brought Roku down off the high, and it went as low as 38. But now it's climbing back, and they're probably going to be positive earnings in 2024. You said 2024, so I think it'll probably hit 200. So I'm gonna just say 200. It can happen. I don't know if you missed it, but we talked about the call option. Right now, I'm in a January 125 calls on Roku. That's kind of high. You may not want to be that risky. I'm gonna go lower, but I'm gonna close those by December next month. I'm gonna open up. I'm gonna go back to April, for example. I'm gonna keep writing it. So like if I tell you, you know, a call option can get 24 leverage return over stocks 24 times. And if I'm telling you the stock can go to 200 from 100, then like that's all you really need, like to make a lot of money. Like just like a once in a lifetime. Like these are the kind of things you can make a tremendous amount of money if you do this trade right. So stick with Roku. There's other stocks. There's another one. Snowflake. SNOW. I'm going to talk about this one next week. This one is 174 a share, so a little more expensive than Roku. But they do cloud computing, and similar to Roku, they're like a small player in a big field that's growing. So right down Snow, SNOW, I think they're going up. We talked about Roku, ROKU, going up. I always like Netflix, NFLX. I think it'll maintain. I do cover calls on Netflix. Like if anybody wants to know about cover calls, next week, come back next week. I'm gonna talk about cover calls. You make a monthly return. Let's say 4% on your money, pretty steady every month. Pay your bills, pay your car note. Buy food, pay your electric bill. If you have 10, 20, 30, 40 grand of account size or higher, you can do these cover calls on shares like Netflix, on Roku. Roku only takes 10 grand, and they pay a decent amount per month. So stay tuned for that. Any questions? We're gonna wrap up soon. Cheshire Cat, welcome. Give me some likes. If you want to message me, anybody, I will do my best to answer your questions about stocks. Just send me a message. I check my messages. If you want to know if your stock is good, I will evaluate it for you. Don't be afraid. Don't be upset if I tell you your stock is trash, because most stocks are like, honestly, like most stocks do not make money. Let's tell you that right now. Like you really want to be in the S&P 500. Honestly, like especially if you're new, if you're not an experienced trader, you need to be in the S&P 500 because those are the companies that are meaningful, that are going to give you a decent return with some stability, with less risk, really. Don't put all your money in call options. Have a balance in your account, some shares, some call options. Do think about doing some cover calls for monthly income. Do look for some stocks that are going up, like Roku is in play. Write it down. It's in play. Okay, like Like, I don't know how to tell you, like, Blue Horseshoe loves Roku. Okay? Just like, write it down somewhere. It's $100, 103 today. Okay? So you go higher tomorrow. Probably go to 120, in this run. And if the Dow Jones breaks 36.6, we're gonna be in a new bull market, and then you'll see everything go up. Be safe, trade safely. I say risk capital only. Don't use your rent money. Thank you guys. Appreciate you. See you next Monday.